All right, let's talk AEI. We just got their Q2 2025 earnings, and management is throwing around a huge phrase, inflection point. That one moment where the whole story is supposed to flip. But the big question is, did it actually happen?
And that's really the heart of it, isn't it? Is this a real turning point, or are they just burning through cash? Because right now, you've got two completely different stories. You have the story management is spinning, and then you have the story the market is telling with the stock price. And believe me, they do not line up. So let's dig in and see which one holds more weight. Okay, first things first. Before we get into all the grand promises and the vision for the future, we have to look at the cold, hard numbers. The stuff that doesn't lie. Let's ground ourselves in the financial reality of what actually happened this quarter. And right off the bat, the bottom line hits you. A GAAP loss of 48 cents per share. Look, for any company, that's not great. But for a company that's trying to convince the world it's commercially viable, that's a pretty tough number to start with. So what about the top line, the actual sales? Well, the revenue for the whole quarter was about $20,000. I mean, think about that. That's nothing. That barely covers one engineer's salary for a few months. And this is a company that's supposed to be changing the world of autonomous tech. Oof. So on one hand, you've got that tiny bit of revenue coming in. On the other hand, they burned through $7.1 million in cash. I mean, the clock is ticking, right? When you're spending money at that rate, you have got to start bringing in some serious cash, and you've got to do it fast. Okay, so let's just step back and look at the whole picture here. We've got steep losses, basically zero revenue, and get this, a gross loss. That means it literally cost them more to make their stuff than they sold it for, all while their bank account of about $19 million is shrinking by over $7 million every quarter. So yeah, just looking at the numbers on paper, it looks pretty darn bleak. But, and this is a big but, this is where the story takes a fascinating turn. Because despite all of that, management didn't sound worried. They weren't making excuses. No, they came out swinging super bullish. So let's unpack exactly how they're trying to frame this as a major comeback story. And here it is, the key phrase from the CEO, Matt Fisch himself, an inflection point. His whole argument is that those ugly numbers we just saw, that's the past. That's a lagging indicator. He's saying, don't look there. Look over here at this wave of new wins we've just landed. That's where the real story is. So their whole bullish case really rests on three main pillars. Think of these as the three big reasons they want you to believe the future is going to be way different from the past. We've got a huge new customer win, a partnership with a tech giant, and a brand new platform to open up new markets. All right, pillar number one, and it's a doozy, a potential $30 million deal with a leading global transportation OEM. This is exactly the kind of thing the market wants to see, a big, meaty contract. But you got to pay attention to the fine print, right? The key words here are potential and revenue expected to start in 2025. So the win is real, which is great, but the actual cash from it, that's still a ways off. Next up, the NVIDIA partnership. And you really can't overstate how important this is. In the world of self-driving tech, NVIDIA is basically a kingmaker. If you're in their ecosystem, you're legit. So getting fully integrated into their DRIVE AGX Orin platform, that is a massive stamp of approval. It's like getting a golden ticket that tells all the big car manufacturers, hey, AI's tech is real, it's validated, and it's ready for prime time. Now, for the third pillar, we need to get our heads around a term they kept using, physical AI. It sounds complicated, but it's actually pretty simple. It's basically their plan to use their LIDAR tech for everything outside of self-driving cars. Think things like airport safety, security systems, smart logistics, stuff that isn't tied to the super long, slow development cycles of the auto industry. And that whole strategy comes to life in their new platform, OPTIS. And this is key. It's not just another sensor they're selling. It's a whole package deal, a turnkey solution with the analytics built right in, powered by NVIDIA's tech. And why does this matter? Because markets like airport security and logistics move way faster than the car world. This is their big play to start generating real revenue, now, instead of waiting years for automotive design wins to pay off. So there you have it, management's story. A pretty compelling picture of a company at a turning point, right? But what did the market think? The people who are actually putting their money where their mouth is? Well, their reaction was, a little different. It was pure whiplash. I mean, right after the call ended, you had this burst of optimism. The stock shot up almost 9% in after hours. It's like everyone got a sugar rush from the good news. But then people slept on it. And by the next morning, that sugar rush was gone. The stock was down over 11%. That classic pop and drop tells you everything. The market heard the story and liked it, but then the reality of the execution risk sank in and they got cold feet. And this wasn't just nervous day traders either. You had some serious money betting against the company. The short interest was sitting at around 14%. Now that's a pretty big number. What it means is that there's a significant chunk of the market, well-funded, smart investors who are basically saying, nope, we don't buy this turnaround story at all. So, all of this, it brings us right to the heart of the matter. It's this fundamental tug-of-war playing out. On one side, you have the bulls, the believers, who are buying into this inflection point narrative. And on the other, you've got the bears, who are looking at those financials and just can't see past the red ink. Let's put these two arguments head to head.
And really, this slide sums up the entire debate. The bulls are looking forward. They see the pipeline, that big $30 million win, and that all-important NVIDIA validation, and they say, the future is bright. The bears, though, they're completely anchored in the here and now. They see the losses, they see the cash burn, and they see a mountain of risk. It's a classic Wall Street showdown. Jam tomorrow versus jam today.
Okay, so now that we've got the full picture, the good, the bad, and the ugly, let's pivot to our final segment, the next call. This is where we look ahead and sketch out a potential trade idea based on everything we've just discussed.
But first, let me be crystal clear because this is really important. What follows is just a conceptual idea for informational purposes. This is absolutely not financial advice or a recommendation to buy or sell anything.
So the idea we're kicking around is something we're calling the synthetic long LIDAR spread. Now, the thinking here isn't just about betting on AI. It's about betting on a shakeout in the entire LIDAR industry. Here's how it would work. You'd go long out-of-the-money call options on AI. That gives you a shot at the upside if they really pull this off. But at the same time, you'd go short a basket of their competitors, the ones who are also burning a ton of cash but don't have that key NVIDIA partnership. The whole bet is that the gap between the winners and the losers in LIDAR is about to get a whole lot wider.
And that really brings us to the final question, the one you have to ask yourself. Is AI truly at the start of becoming a leader in the LIDAR space? Have they really hit that inflection point? Or is all the market skepticism completely justified? Management has laid out their map, but the path ahead is still full of challenges. And just one last time, for good measure, this is not financial advice.